Hello and welcome to this very special show, which we are very simply calling Be Bullish, because that's what the market is, and the is about the prospects both for growth, manufacturing, and of course, the financial market as well. Mahesh Nandurkar is India strategist at CLSA India, and he's joining us right now to take some questions, basically laying out the roadmap for the bull market that most believe we are in for. Mahesh, thanks very much for your time. Great to have you with us here. We are in a bull market, Mahesh. You'd agree with me?
I definitely believe that there will be good times ahead. We've already seen from the stock market perspective, some of those things are already being anticipated, and the market has moved up over the last 6 to 8 months. And it looks like that the good times should continue at least for some time.
Okay, I'll get to the market, but I just want to start by asking you, what are people so bullish about? There's a general feel-good factor all around, right? I guess that's because of the stability. There's a solid 5-year visibility of this new government. The mandate has been historic for the NDA. But is the market very bullish that the earlier dispensation has changed? There are new people who are going to take charge? Or is it very bullish about specifically the team which is going to take charge, Mr. Modi and his team, which has got this mandate for the next 5 years?
I think the market is feeling bullish about, I would say 3 factors to be precise. One is that, after seeing the global financial crisis, the overall emerging markets in general and India specifically obviously went through, a downturn on investment cycle, economic growth slowing down, and we seem to be poised for a cyclical upturn. It looks like worst is behind, and the economy bottomed out somewhere in FY13. And FY14, 15 onwards, we should be seeing some improvements on that. So one part is
that has got nothing to do with the political.
Yeah. So one is a pure cyclical upturn. I think the worst is behind on that. Secondly, clearly the market and the market participants are enthusiastic about the fact that the Indian voters have given a very decisive mandate to a government. And the next government hopefully will obviously be more capable in terms of taking more decisive action because they have got such a strong mandate. So that's the second point. And the third point is that the investors are also looking at the past track record of Mr. Modi, what he has been able to do in Gujarat, and to what extent that can be translated at the national level. So I think these are the 3 broad factors, I would say, that the market is optimistic about.
You've done some detailed work, right, in terms of what Mr. Modi has done in Gujarat and how industry is done in Gujarat over the last decade or so. Tell us, what should we expect from Mr. Modi as he gets the Prime Ministership now?
I think what we've seen in Gujarat over the last decade, there are many changes that have happened. First of all, clearly there has been a thrust on infrastructure development. We have seen how the power sector has developed. Gujarat has emerged from a power deficit state now to a power surplus state. Right. The second is the impetus given to manufacturing. Now there are many angles to it, such as easier availability of land and the other inputs which are required for manufacturing. So those have been made more easily available for any entrepreneur, any manufacturer, of that sort. The recently released report, by one of the ministries itself talks about how efficient the land acquisition policy has been in Gujarat and how that can be a template for some of the other states as well. So focus on infrastructure, focus on land acquisition policy, which has helped in turn the manufacturing sector. Also, we looked at some of the public sector undertakings from the state of Gujarat. And we see that they seem to be much more profitable, more professionally managed, less of political interference. So even the public sector, it's not just the private sector, even the public sector seems to have done well in the state of Gujarat. And while the market focuses only on some of the business-related activities, I would highlight that even the agricultural GDP growth in Gujarat has been way ahead of the national average over the last decade. And that has been achieved by variety of things like better irrigation facilities, better technological know-how, better power availability.
Right.
And mind you, farmers in Gujarat pay for their power, unlike in some other states. So that also goes to show that if farmers
So there are different rates essentially for farmers. I mean, if they want to buy power, right?
right, there are different rates, and more importantly, it's not for free.
Yeah.
They're paying something, so it's obviously subsidized power, but they're paying for it. So I think that goes to show that the consumer, in this case farmer, are willing to pay if you're getting a reliable supply of goods and services. So yeah, so I think there are this broad spectrum of activities ranging from agriculture right up to infrastructure and land acquisition and so on, and the lesser political interference in the public sector, business, etc. So there are many things. So the expectations are that
Prime Minister Modi will be able to sort of do a lot of the, right? Essentially, that's the
that's the
hope and bet.
expectations. Absolutely, absolutely.
So the obvious question is that, I mean, Gujarat is one state. Here we are talking about India, right? A federal structure. How easy or difficult is it going to be for him, even with this mandate, to be able to effectively sort of work with all the states and do this?
Yeah, absolutely. In fact, there will be many challenges. Even with a strong mandate such as this, Prime Minister is going to face a lot of challenges, no doubt about that. It is foolish to expect that one person can change the country with 125 crore as population. It's obviously going to take a lot of time and a lot of systemic changes, etc., etc. Obviously, the other challenges, as you rightly mentioned, is the state government versus the central government.
Right.
Now, I think one of the things that might work in the favor of the next Prime Minister is that he himself has worked at the state level for more than a decade now.
Right.
So he clearly understands the state versus center equation, and what are the friction points and what are the state chief ministers looking out for.
Right.
And I think rightly so, the Prime Minister has also highlighted in some of the prior interactions with the media and in the other public forum that he's looking at the Prime Minister and the Chief Minister as a team. I think that is very essential, because central government on its own, there are limitations to what it can do.
Right.
So unless it has the assistance of the state chief ministers, it will not be able to do too much.
Right. The other challenge is a lot of the sort of bills, land acquisition, for example, right? These are laws now. These are not just bills anymore. These are laws. Of course, they can change laws. They've got the mandate to do it. Do you think that's going to be the road ahead? I mean, the land acquisition bill, for example, right? Many have said, well, that should be scrapped. I mean, it doesn't really work for either the government or the industry. It just doesn't work. I mean, so
now, let's face it. So when the land acquisition bill, or for that matter, even the food security bill, when it was put up for debate and vote in the parliament, BJP supported it. So those bills and those acts are here to stay.
Yeah.
My sense is that once again I'm drawing from some of the experiences from the state of Gujarat, is that Mr. Modi is more of an execution guy or an implementation guy, and which is what is, I think, required for our country at this point in time. I mean, there are some $150 billion worth of various investment projects across infrastructure, manufacturing, mining, etc., are stuck for a variety of reasons. Now, even if half of those get moving, and I don't think there is much of a parliamentary or legislative hurdles that these projects face. These are more like execution related and administrative related. Even if half of those projects get moving, it could easily add about 75 to 100 basis points to the GDP. So I think that would be the key focus in my view, and that definitely looks like the lowest hanging fruit.
Right.
Now, so far as the bills and the other parliamentary action is concerned, obviously, while you have got a very strong mandate in the lower house, the same is not the case with the upper house.
Yeah.
Exactly. So there are some constitutional, solutions to that, in that, if a bill is accepted or approved by the lower house and rejected by the upper house, you can have a joint sitting, and there NDA seems to be having a majority, at the joint level. But that's once again a very unusual route, or something that you will resort to only in case of some exception.
Right.
So my sense is, so once again to come back, I think the focus of the government would be and should be, I believe, more on how it can tackle the challenges administratively, and obviously a few things will require parliamentary ratification as well.
Right. So, I mean, you don't expect laws to be repealed and things like that, right? I mean, that's essentially not what you think. The government will work its way around, and Mr. Modi is known for his administrative capabilities,
Right.
execution capabilities.
Right. So government will need to work its way around, and there'll obviously be some things that will need to be amended, changed, introduced, etc. So those things will obviously happen. But I guess the focus would be on execution.
Just one point, I think it was Sajid Chinoy, JP Morgan, who put out a note a few weeks back, and he went project by project, and he concluded that almost 80% of the problems with stuck projects, right? You mentioned the $150 billion figure. You said half of it moves, it adds quite a bit to the GDP. He said 80% of stalled projects and projects of a minimum size, the problems actually lie with the state government. It's got nothing to do with the center. These are state issues, and that's the reason why these projects are stuck. How do you sort of respond to that, and what this team at the center in Delhi can do to sort of expedite that?
There are obviously state-related issues. I mean, there are issues pertaining to land acquisition, there are issues pertaining to financing availability, the environmental clearance, both at the central and at the state level. So there are all sorts of issues involved. So as I said, so the challenges are going to be many. But what a central government can do, is first of all, okay, the environmental and forest clearance part to a large extent lies with the central government.
That can be.
And we have seen, and our analysis shows that over a period of last 6 years, average time taken to get an environmental clearance has gone from 7 to 8 months, which was the case in about 2007, 2008, to about 25 months to 30 months as of now. So that can definitely be looked at. Forest is something that can be looked at. And what the central government can do is by putting the right macro policies in place, create an environment for the entrepreneurs, for the businessmen to push ahead with their project. A lot of times what you've seen is if the economic environment is not good enough, even the entrepreneurs don't want to push ahead with their projects. So once you create that environment, a few things get solved automatically.
The mood certainly is lifted, Mahesh, right? I mean, it's certainly lifted, and we'll see the actual implementation of what happens on the ground. So let me ask you, what should we expect from the new government? I mean, you've written extensively about what the government should focus on. Very quickly, if you can run us through what you believe the new government's focus should be immediately.
I think immediately, as I said, the lowest hanging fruit is to accelerate the approval process, undertake the administrative steps that need to be taken. I think that is the single biggest thing to be done in my view. There is also some expectations around how that can be achieved also by merging some of the ministries and thereby reducing interministerial disputes, etc. That's one thing. The second thing is also about the push to infrastructure and push to manufacture. I think those are the two segments which the government has to focus on, because given the demographic profile of our country, about 10 to 12 million new job seekers are entering the market every year, and so many jobs have to be created. And the best way to create jobs for such a mass kind of inflow of the youth is manufacturing and construction. There is no third alternative to that. So those two things have to be done. And then obviously there'll be many other things like some tax related reforms like GST and looking at some of the direct tax related issues as well. Agricultural reform, I think something that I spoke about earlier in Gujarat. I think the Indian agricultural yield is about 1/3 or 1/4 of what it is in the other comparable economies. A lot can be done there as well. So it's not that we have to focus only on the business side. Even the agriculture and farmers also need to be looked at, and significant improvement is possible for them as well.
So you're talking about what, GM crops and things like that, or
not just GM crops? Things like irrigation. I think irrigation and better availability of water and predictability of water availability can actually make a big difference. So I think some of those things can be taken up as well.
Is there a demand problem which this government will have to sort of face with? We focus quite a bit on the government, the need to resolve supply side issues, right? I mean, I don't dispute that in many areas, most areas, we are a supply starved kind of economy, right? But in the near to medium term, is there a demand issue as well? Because how do you get demand going, kickstart demand?
I think it's to an extent chicken and egg situation. So yes, you are absolutely right. I mean, over the period of last couple of years, we have seen a significant demand destruction, be it two-wheeler demand or four-wheeler and so on. To some extent, I think that can be changed at the margin by sentiments. And as you mentioned, the sentiments sort of seem to be looking up. And if there is a proper follow through, on those sentiments, then demand can improve, and it can create a virtuous cycle. Demand creating its own
Will the
supply.
government need to spend to do that, to sort of provide that spark, the initial push? Or you think there's little scope of the government actually going on a big spending spree? That won't
Big
happen.
spending spree is unlikely, because we need to be worried about the fiscal deficit side of the equation as well. But the government can be judicious, in where they want to spend and where they don't want to spend, etc. But ultimately, I think the economic activities picking up is largely contingent upon the consumer sentiments and the corporate sentiments. So the government can create an environment in which the demand can be sort of enhanced, or the corporates feel more confident, etc. But I think ultimately the spending has to come finally from the private sector and the consumers. Government can do only
And in a
so
way,
much.
what we need actually is not a new investment cycle, but essentially restarting the dead investment cycle, right? I mean, that's essentially what is required.
Absolutely. And the new investments, obviously will be required, but I think the impact of that will be seen with a bit of a lag.
Yeah.
So, I don't expect any big new infrastructure project that can be conceived today can have any meaningful impact, before 18 to 24 months. So, in the meanwhile, it has to be the existing ones that have to be sort of accelerated.
Okay, let's get to the market, Mahesh. So we began with that. You said good times lie ahead, right? But you were hesitant and stopping. Well, it's a bull market, right? We're in for a multi-year bull market. Would you say that?
No, I would say that we seem to be in a phase where the domestic sort of the investment environment is improving from the business perspective, that is, and that should ultimately translate into investor sort of response from the stock market side as well. So I would say that the good times are definitely ahead for the next few years.
So typically in a bull market, it's also a leap of faith, right? Which one has to take, because a lot of times in many sectors after the rally we've had, justifying valuations on PE, price to book, etc., kind of become very hard to do. You have to imagine earnings 2 years hence, 3 years hence. Right. I mean, and that's always perplexing, right? It's hard to do. Right. How do you think about that? Because I mean, 10% earnings growth will not become 20, 25 suddenly. It'll take time. But market discounts that today.
Right, absolutely. I think the way to look at the market movements is not necessarily whether the market as a whole can give significantly higher returns than what it has done in the last 5 years. But I think we have to look at the segments of the economy or the segments of the market that can do much better in the next 5 years, or in the segments that might not do as well in the next 5 years. So I mean, for example, over the last 5 years, we've seen certain sectors which were considered like defensives and consumer oriented and export oriented, that did phenomenally well. Right. And the market as a whole, if you look at just the index level, it did not do that badly in the last 5 years. But obviously, the certain other segments of the economy or the market, like the investment cycle stocks and the corporate lenders and the capital goods companies, etc., did not do too well. So I think we have to look at the sub segments than looking at just the broader market here. So the broader market trajectory might not be too different in the next 3 years or 5 years as compared to what we've seen in the previous 3 or 5 years. But we need to look at which segments of that market are likely to do better and worse.
Qualify that again. You said when the broader market trajectory will not be very different from the last.
Might not be very different, because if you look at the last 5 or 6 years, I mean, if you look at Sensex had hit a bottom of 8,000 or so. Sure. Back in May 2000, May or March of 2009. So in last 5 years, we have gone 3 times. Yeah. In the last sort of 5 years. So it's not been that bad a time, in terms of the overall market movement. Right. Has moved and what has not moved, right, is what we need to look at.
No, so can say 25 become 75, or you're saying the only way we get a big move in the market is the market goes back to 8 and then climbs back to 25, just to
Yeah, no, I'm not saying that. So what I'm saying is, if you look at the overall market valuations, it's trading at about 15 times on a 1 year forward basis, which is roughly in line with the last 10-year average. So I don't think the market is expensive at all. So it's just about at the average level. And I think this is very much sustainable. And the focus will be therefore on the overall earnings growth. And we're looking at earnings growth, the corporate earnings growth, to improve to about 15% or 17%, over the next 2-3 years.
Right.
And I don't see any reason why the market will not track similar returns exactly as the earnings growth is. And my sense is that the earnings growth will be better in some of the corporate lenders or some of the some of the stocks or sectors related to the investment cycle recovery.